Chris Kilhofer sent this video called The Hidden Economic Crisis That is Silently Crushing the Middle Class.
People cannot see. So today I'm sitting down with Jeff Snyder. Jeff is going to give you specific insight of what to watch going forward. So stay tuned. What do you see? What is the reason that stocks are actually going down? Because the inflation numbers were actually positive last week.
Yeah, this is stock market's a curious thing, right? I mean, everybody thinks of the stock market as it's the economy. It's a reflection of how things are going fundamentally, and it's really not. Basically, stock markets go up and up and up until stock market participants encounter what they think is a recession. You look at the charts, long run charts of the stock market since the big bull market began in the early 1980s, and really the only times you see substantial dips that hang around for more than just a couple of days or a couple of weeks are when there are economic recessions. So shareholders are like, okay, we know this, stocks go up, you want to hold stocks in the long run, but you got to be careful about the recessions. So stocks tend to stumble when the market starts to get a sense that their traditional recession, negative GDP, negative payrolls, those types of signals that we always get. That's when everybody starts to head for the exits. You think, and it's, by the way, if you start to see negative GDP, negative payrolls, it's already too late. So if you see a correction, and by the way, this correction in the stock market, I think for the S&P 500 has been one of the fastest developing corrections in stock market over the last century or so. So this has been a pretty profound shift in the marketplace. And as you said, Ken, it's not about the Fed. It's not about consumer prices or inflation. This one's about macroeconomic risk. Like I said, people are concerned that given the fundamental situation of the macroeconomy, plus you throw a couple other things, a couple curveballs on top, that the chances of that traditional recession have gone up. And people, rationally are not waiting around to find out if we're going to get a negative GDP, if we're going to get negative payrolls. Like I said, that's too late. By the time you see them, it's gone too far.
Yeah, I know, it's 2 consecutive quarters, I guess, of negative GDP is technically a recession. But I wanted to ask you this question: are we in one now, but we just can't see it?
Now that's a loaded question, Ken. You know that. Well, for me, I get crap all the time because I say we've been in a recession for quite some time, and people hate that because GDP's been positive and the payroll numbers are positive. What I keep
Hang on, let's go back real quick to these charts.
In a recession for quite some time, and people hate that.
Okay, so this chart looks like GDP change from previous year. And so a recession is technically 2 quarters of negative GDP growth, right? It's one of those things where it's like, it's got to grow forever, like corporate profits. They have to grow forever, like AMD. It has to go up forever, right? But there are times where we have 2 consecutive quarters of negative GDP growth, and that constitutes a recession, right? Now, I remember specifically, I don't want to get political, but I do remember during Biden's time that these 2 were both negative. So I don't know if this was revised or whatnot, because I remember there was a big stink about, hey, you're already in a recession. And then they started changing the definition of what a recession is. But the technical term is 2 quarters of consecutive GDP contraction. So, I mean, I don't see it right here, at least right now, but I'll tell you one thing. What costs less today than it did 5 years ago? There's probably not much you could name. But I would bet, and hopefully they show some stats on this because I'm kind of talking out my backside here. I would bet that 9 out of 10 people feel that they are in a worse place financially today than they were pre-COVID, which sucks, right? Imagine going 5 years and then 5 years later being like, oh yeah, I'm actually worse off than I was 5 years ago. A lot of people feel that way. And then people who want to get into homes are practically unaffordable now because the price of the homes have doubled. The interest rates have tripled. And we're looking at situations where the affordability in basically everything is so much more difficult than it was just a few years ago. So to his point, and I don't know where he's going here, but he was saying something about, I feel like we've been in a recession for a while now. I think in many ways we have been, but curious to see what he has to say.
Because GDP's been positive and the payroll numbers are positive. And what I keep telling them is that we never really left the last one. We were supposed to have recovered from 2020 and 2021. We're supposed to be this red hot economy. That's where inflation came from. And that's not really the case. When you look at all the macroeconomic statistics, especially in real terms, we never really left the last one. So there's an argument to be made, and a legitimate one, that we've been in a recession this entire time. Of course, that is not at all what people are thinking about. That's not what the stock market is pricing. The stock market is pricing something like, say, the 2001 recession, the dot-com recession. In that recession, we didn't even have 2 quarters in a row of negative GDP. It was actually down in the second quarter of 2001, then up, and then down again. And overall, what you had is an economy that kind of flatlined for a little while and contracted, but there was a rise in unemployment, a pretty substantial rise in unemployment. So if you look at the economy from the perspective of unemployment, as well as the fact that, we're way behind where we should be, the economy.
I mean, show me the charts and let me look at it first. All right. Broadly defined measure of U.S. unemployment. Well, that's been ticking up quite a lot here in the last 12 months, January to January. But then again, the scale, I thought that this was more of a scale. This is like less than 1 percentage point right here, like 2/3 of a point, maybe. So, I mean, what this does say is that unemployment is going up, which is certainly not good for the economy.
From the perspective of unemployment, as well as the fact that, we're way behind where we should be from the pandemic period. It's a really bad situation that leaves any kind of additional marginal factors like, tariffs and trade protectionism duties and things like that. Another rise and sharp spike in consumer prices like we saw in January with auto insurance, that's going to hurt as well. So whether or not we've been in a recession so far, I mean, it almost doesn't matter at this point. The macroeconomic fundamentals have been weak all along. I mean, that's why we have Trump to begin with, right? I mean, everybody got tired of hearing how great the economy was from the last administration. So they were basically voting with their feet, saying, look, we've had enough talking about how great the economy is. It absolutely isn't. So we had this economy that wasn't great to begin with, and now you've got a bunch of negative economic stuff and artificial stuff that come up this year. And it looks like we go from a recession that people aren't sure if it's a recession to one that looks more like what people associate with a recession. And suddenly you can understand why the stock market's doing what it's doing.
A lot of people are wondering how Trump's policies are going to affect their investments. The truth is, when there's change, there's opportunity. If you know how
I feel like this is an ad. I'm going to skip it.
to spot it. In my it feels like there's, or maybe even in the stock market, if I guess that's not technically a hard asset, but real estate, you have a lot of equity. You have a lot of, call it paper wealth, right? You don't really cash it in until you do. And then there's people that don't have hard assets, and they're the ones that are getting crushed, it seems like, with these big inflation numbers and like you said, the higher insurance, those kinds of things, those little things. And so those are a lot of my residents. We have 10,000 tenants, and we're starting to see them pull back. They're pulling back on just basic necessity things, like maybe they have multiple streaming services, or maybe they have a gym membership, or maybe they have whatever it is. And, people are starting to really pull back. It feels like there's this affluent piece of the economy that, has lots of equity in their home, let's say, because they bought 3 or 4 or 5 years ago, or, gold's over 300 or 3,000 now. There's all these things. And of course, crypto is way up if you look at it historically. So there's like these people that are sitting there thinking, oh, I'm good. But then there's the others that kind of the have-nots. And I don't know if it feels like there's a big bifurcation here.
Yeah, they're always, I mean, that's what a recession really is. It's those people, like you're saying, Ken, who don't have the protection of financial assets. And their biggest asset is really their labor, right? That's basically what they have. They don't really own a whole lot beside of it. And so when prices go up, their labor gets devalued compared to the relative price of goods, which means you get further and further behind. This, by the way, is the recession that I was talking about. Yeah. The fact that we never recovered from 2021 and 2022 is essentially the fact that the vast majority of people were left behind. They were basically impoverished by all these price changes. So if you were protected financially, you did okay, and you're thinking, it's not too bad. But the vast majority of the population doesn't have that luxury, doesn't have that ability. And so their labor has been tremendously devalued. Their purchasing power has gone way down. And by the way, they know it. That's why they're so pissed off. That's why and it's not just the US, by the way. That's why people are pissed off all around the world. We're seeing governments fall all over the place because people want answers and they're not really getting them. So if you have financial protection, you're okay, but everybody else isn't. And so when you look at 2025, the economy, like you're saying, Ken, you see people pulling back. It's because they've been left behind so much to begin with. And now they're seeing all these other signs, really worrisome signs in the labor market itself, where you have companies that have gone through the same thing. Businesses that haven't been able to pass along costs that are rising for their own business to their customers, because the economy increasingly difficult means that businesses can't pass those costs on to customers. They've seen their margins squeeze. And what do you do if you're a business owner and your margins get squeezed? Well, you cut back where you can. Yeah. If the price of oil has gone up, that means you got to cut back in something else. And usually that means other workers. So what we've seen really over going back to last summer and before, is the amount of hours worked among workers has really fallen off. The average work week, according to latest data, is down around to the depths of the 2020 pandemic, as well as the 2008 recession. That's how much employers have been.
I want to see receipts on that. You can't tell me that average hours worked now in 2025 is equivalent to what it was in the depths of the COVID pullback. No way. I don't believe that.
And cutting back and restraining hours simply because they don't have the margins to pass along costs. And what does that do? It does exactly to what you just said. Those who their only asset is their labor, now you don't work as much, your paycheck doesn't go as far, and it leads to the situation where consumers are like, they're getting squeezed and getting hit from everywhere. They become increasingly concerned about everything they hear on TV, what they're seeing in their job, the fact their paychecks don't go far enough, and then they start pulling back spending too, because they got to protect themselves in the only way they know how, which is to increase their near-term savings. And it just leads to this self-reinforcing vicious cycle that becomes what everybody associates with as a recession.
Yeah, and I'll give you 2 stories, and these are recent. I had a very good friend that texted me like a month ago, and he said, I sold my law practice. And so I got him on the phone like a couple days later. I said, what's going on? He's like, in 5 years, it's all AI. And I'm like, wow, this is a guy that's been doing, law for 30 to almost 40 years. Then there was another scenario where a really good friend of mine has a big PR marketing agency. He has 160 employees, and he's down to 110. And I said, why? He goes, I don't need copy editors. I don't need copywriters. I don't need social media. Like all this stuff, they're figuring out ways to use tech. Now, why would they do that? It's because of the cost pressures that they already have. So, their labor.
I mean, I'm sure that is real. I'm sure there are a lot of people who are looking at, you know what? Let's just throw some examples around. I've got 50 employees. A lot of them are doing white collar jobs. A lot of them have repetitive tasks. I bet ChatGPT could do this task. And I wouldn't be surprised if that's where things are going in a lot of ways, which on the whole is pretty scary, right? That's pretty scary for sure. But it's not perfect yet. Just this very morning, I was emailing with Pat Ballooney, the trading psychologist. I'm going to try and have him on live Thursday morning. And so he's in Australia, and I put in 7:45 Central Time converted to Melbourne time, and it was an entire day wrong. And I looked at it and I was like, 7:45 a.m. Central Time could not possibly be 11:45 p.m. Friday night. Right? Like we skipped a whole day here, and I'm like, that can't be right. So I found a couple other websites, and yeah, ChatGPT was just flat out wrong. And I was like, huh. It was not right just on the something easy like time zones. I don't know how great that's going to be just right now. However, 5 years from now, it's going to be exponential.
What they're spending with their employees is going up, and the employee needs more money in order to live, and so they have to pay him. But he's having to pull back in his own way to try to figure out. So oddly enough, tech and AI and all these other things are actually one way. Even in my own firm, we can outsource accounting, we can outsource marketing, we can outsource IT. There's all these things that you can do now that you used to actually have a body. And it's very, very interesting as these two worlds are kind of colliding at the same time. And I will tell you this, because I know both these guys well. I don't think they would have ever done it if their actual costs that are hitting them, in the form of rent, in the form of utilities, in the form of labor costs, and all the other things, weren't squeezing their margins, right?
Yeah, and that's the thing. I think people have this idea about, when consumer prices zoomed ahead a couple of years ago, and everybody's been talking about disinflation since then. They have this impression that disinflation means that costs go back down to where they were. And what you said is exactly why they never can. Because,
So disinflation is when inflation starts coming back down. You remember it went up from like 3%, 4%, 9%, then back down to 7% and 6%. The trail down is the disinflation. However, keep in mind that the peak being 9% and then 6% means that those prices at 6% are still higher than they were when they were at 9%. And then again at 5%, it's still higher than it was when it was at 9 and then 6 and then 5, right? That's disinflation. That's not deflation. That's not prices coming down. That's still prices going up, but not as fast. It's still, you've got your foot on the gas, but you've let off the gas a little bit. So you're not you're not accelerating as fast, but you're still accelerating.
You have a business where you have, energy prices go up, and then your labor prices go up, and your materials costs go up. It means the price that you charge your customer has to go up to reflect all of that. And so you can't cut your prices because, your input costs don't go back down, your labor costs don't go back down, your materials costs don't go back down. So you're kind of stuck at a higher level. And so businesses can't cut prices, otherwise they're undercutting their own production. They lose money on everything that they produce. So prices they shift ahead, and then they stay there. But if we don't have a situation where incomes increase as much as prices do, eventually you have more people that are in the bad side of the economy than the good side. And it just leads to the situation where now you have businesses that have no margins. They also have no revenue growth, which is even worse. So now you have no way to really increase profitability except for cutting costs in more in creative ways. Like, using AI is a good example of that, right? It might be some upfront costs as an investment, but over time, you're just reducing the amount of labor that you need, because labor is the most biggest expense that you have. But in a macroeconomic perspective, if everybody's doing the same thing, trying to control their costs for the labor market, that means less income. And as we started out here, the vast majority of people, that's all they have is their labor. And if we're continuing to reduce the volume of labor, eventually consumers have to cut back in spending. But whether they want to or not, doesn't matter.
Yeah, we're starting to see a shift from white collar to blue collar, right? Like we're talking about kind of the trades, let's say. And, as we have a construction company, and for years and years and years, you call it the college institutions have been picking people out of high school and running them through the education system and running up their student debt. We know that all happened. What on the other side of that, those would have normally, a lot of those people would have made their way into the construction trades and the plumbing trades, electrical trades. And so we have this huge gap. And now we're starting to actually see that kind of come back. Because those services, those actual in-person things, are still, believe it or not, in demand, and the price per hour is going up. So we're starting to see kind of that middle management, white collar financial services sector is really getting squeezed.
There's a sector that can be shrunk down.
Yeah, no kidding. Yeah, so it's very interesting to watch this, but I think it's interesting when people are on talking like we are, or on CNBC or whatever it is you watch. They're delusional, because they're looking at their own biases with their own situation, all the'ir friends. We've got equity, we got this, we got that, we're good, our assets are good, but really the working class is getting crushed right now in such a horrible way. And I don't think a lot of people really see it.
Ken, I think the biggest problem is, and we go through this in every recession cycle, by the way, you have economists and the talking heads on TV that say the GDP report last quarter looked like this, and the payroll report last month looked like this, and it looks pretty good. And most of the people who are being squeezed at the bottom say, I don't care what the data says. You're reading it wrong, because what I see, my friends see, and everybody else sees is completely different. And you got to keep in mind some of these macroeconomic.
Yeah, and that's where my head is at. It's like, I don't care about what the data says. What are the real life consequences? What are the real life implications? What are the real life days that people go through? I mean, the best example when I really felt inflation for the first time was I went to the store to get milk and Fruit Loops. I've told this story before, so you probably heard it. But I went to the store, I got 2 jugs of Fairlife milk, because I love Fairlife milk, and a bag of Fruit Loops. And I went to check out, and it was $17. Now, today, you're probably like, oh, that makes sense. But at the time, I was like, $17 for milk and cereal? What is happening? And my wife, she's just like, whatever, that's what things cost. She doesn't care. As long as the card swipes, that's all she cares about. But yeah, like, I'm sure that you've had, and you know what, in the chat, I'm really curious. What was the first like light bulb moment you had where I was like, whoa, inflation is real? I would really like to hear that. I'd really like to share that. If you don't mind typing that in the chat, I'd like to share some of those stories. But real quick, let me introduce myself while you type that in. I know I'm just some random guy on the internet, but my name is Chris Frugal. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start winning with less risk together as a team. Now, we are no longer ranking videos. No longer are we doing ranking videos. And the reason being, and I mentioned it this morning, is that I just feel like it's mean. I don't know. It just doesn't feel like the atmosphere that I want to create. If I'm coming in, I'm watching your video and be like, bro, that's like a number, that's a 1 or a 2, right? Like Tom Nash, right? He's either a 2 or 8. So you are more than welcome to leave your rankings in the chat. But we're not going to do any official ratings together as a team. I hope that's okay. This one in particular didn't really talk too much about the markets. Of course, I'm only about halfway through, and in the essence of time, I ran it a little fast, and I want to get on to do a couple other things with you since you're here, like maybe look at your stocks. But I mean, this video had some interesting information in it. I feel like I'm ready to move on. How about you? Hey, go ahead and subscribe if you haven't already. But let's see what y'all put in the chat here. When real prices went up 20 to 30%, yeah, Lay's potato chips small size became $4.99. Holy cow. Justin says a 12-pack of soda being over $8. Yeah, that's crazy. Sorg says, as I accumulated savings from a good job, housing prices went up faster. Oh, that probably hurt bad, didn't it? Right? I remember one time we were closing on a house, and they're like, okay, the amount you need to come up with is $81,000. And I wrote them back and I was like, $81,000? Where do you think I'm going to get $81,000 from? But yeah, dude, I'm sure that in a situation like that, where it's like you just saved up for years to get that $81,000, and then the housing prices have gone up. Now you need 120. It's like, oh, is it ever going to happen? So Sorg, thank you for sharing that. Beer went way up. Yogurt single servings used to be under $1. Yep, chips are getting out of hand. When everything at Dollar General went up 50%. Man, I haven't been at Dollar General in ages, but I remember last time when I went into one, first off, it smelled weird. It smelled real weird. And then second off, I was like, these prices suck. You just go to Walmart and do better than this. I don't know how Dollar General's in business. Christian says, I know that BA was covered. Oh, Boeing, right, was covered in the morning call. But can you show us if any outlier blocks are out? We can look at that in just a little bit. Don't forget, okay, Christian? Randy went to McDonald's for a McDouble, medium fries, and a medium unsweet tea, and it was $10. Whoa. You know, I heard Chili's is running some really good specials, and I've heard people are doing direct comparisons in McDonald's pricing and Chili's pricing, and saying you could get so much more better food at Chili's for the same price as at McDonald's. Holy cow, Randy, that's nuts. You know, that's interesting too, because McDonald's, I feel like they ran themselves ahead faster than most places did. I remember hearing something a while ago where their quarter over quarter sales were down while inflation was up. And I was like, you realize that that is huge. That is so much less in sales, because if inflation went up, we'll use ballpark numbers. If inflation went up 5% and your quarter over quarter sales went down 4.5%, you realize that you basically lost nearly 10% in your total sales numbers there. That's crazy. Not sales units, but sales dollars. But yeah, dude, Randy, that's crazy. Andy says it was definitely the grocery store for me. I went from not wanting to spend $100 to not wanting to spend $200. Yeah, no joke. Beer, five pounds a pint. Please look at AMD. William says, accident knocked my crystal ball off my shelf this morning and it shattered. So now I don't know what stocks are recommended on YouTube now. Potatoes, for goodness sake. Insurance prices. Yeah, insurance prices are. So I worked at 2 insurance companies. And I'll tell you what, like, insurance is such a scam. Such a scam. It's like, hey, we'll be glad to take your money, but if you want to get paid out, yeah, good luck. Good luck. For sure. Dustin says, looking for a house in 2021 and people were willing to bid 50 to 100K over in the DFW area. So I live in the DFW area, Dustin. We should hang sometime. But I remember talking to somebody one time while getting coffee, and they're like, man, I want to buy a house, but I can't. Every single house that I look at already has an offer on it, same day, for 50 to 100K over what the sticker price was. And it's like, you just couldn't get ahead. I mean, thankfully, I got into my house in 2016. So I never had to deal with that. But yeah, dude, I'm sure that was really, really painful. Are you and Tom still thinking about collaborating? I have emailed Tom. I haven't heard back. Maybe he's on spring break too. I have not heard back from Tom yet. Laura says 100% increase in the price of coffee. And Alpha Love says when it costs $100 to fill the tank. Yeah. All right, so let's move on here. But I really appreciate you guys sharing your stories in the chat. That means a lot to me. Now let's go over to Discord and look at our member highlight. Now listen, I have not been on top of Discord in the last couple of weeks because I've been on vacation. So I'm going to see what we can find, and I'm sure it's going to be awesome. All right, over in our Discord, I'm going to go over to the look. I know that you guys have been tagging me on stuff, but I'll be very honest with you. I've not even had a chance to look at it yet. I'm going to go into the Sherry Big Wins. Jose says, hi all, my big win of the week actually started in February, was to follow my plan. And after a successful plan and successful trade in ABBV, I averaged up starting at 191 after a gap and go. And I exited all positions at around 211. One of the first closes under the 10 EMA with a 10% average profit. Currently it's at 208. Thank you, Chris, for making charts look simpler. That's awesome. Congratulations, Jose. So first off, he created a plan. That's a huge win right there. Having a plan separates the best from the rest. So way to go, Jose, on that. And then successfully following that plan. Then he averaged up after a gap and go. Remember, we talked about it. If it gaps up and it doesn't close below that gap candle, that could be considered a gap and go. And it totally did. So congratulations, Jose. I am so stoked that was the first one I pulled up. First one, best one, Jose. I'm going to throw some emojis at you. I'm going to throw an outlier emoji, thumbs up, of course, heart, fire emojis, a cheers emoji. And just for good measure, we'll throw a dollar sign emoji at you. So congratulations to that, Jose. I'm super, super stoked that worked out well for you. So, of course, be sure to share your stories in the Discord. And the best way that you can pay me back, if I help you out in any way at all, is to share, tell everybody about Outlier. That is the way that you can pay me back. And of course, you can hit the like button. Now, let's go look at trading in the Outlier trading room. So what is Outlier and what does it work? And how does it work? Well, Uncle Warren used to say, be fearful when others are greedy and greedy when others are fearful. And this morning, I forget which one it was. It might have been Boeing. In fact, let's go to Boeing real quick. Clearly, I have too many things going on here. There we go. Let's go to Boeing real quick. Because I think Boeing was one that had a really high level of greed, and then it snapped back and it made a giant trade. I don't know. I don't think that was it. Anyway, I can't remember right now. But, we talk about this all the time. Be fearful when others are greedy and greedy when others are fearful. And I've had some people in the comments saying, what are you talking about, Chris? That's the opposite of what you're talking about. Well, not really, right? Because like right here is a great example, right? People weren't super greedy in Boeing in December. And you can imagine why. And then it had this huge run and then a sell-off here when the greed value reached 82. And then it came down and got fearful, and now it's starting to turn from fear into greed. So yeah, that's what we're talking about here when we say that. Be fearful when others are greedy and greedy when others are fearful. That doesn't mean buy the dip. That doesn't mean buy the dip. An outlier shows you if investors are acting irrationally fearful or greedy and by how much, allowing you to get into the stock before the outlier move happens. And if you're ready to save time, make money, and start winning with less risk, I encourage you to go over to outlier.com and get the annual pass for just 82 cents a day. That's 64% off the regular monthly price. And if you're on your monthly trial, just shoot us an email and we can upgrade you, no sweat. So my style of trading using Outlier is called the golden ticket trading strategy, and it's where only price pays. And this is where it starts at. This is where it starts at with the 10 over the 20, price over the 50, or the 10 under the 20, price under the 50. Let's see. Well, I'm gonna have to add in a couple things back onto my charts here real quick. I need to add on my order blocks, soon to be called outlier blocks. I need to add the 10 and 20 back. And what we see right now is the SPY came down, bounced really hard on this order block that was created back in September. Tell me order blocks don't work. Bounced up, create a second order block right here, bounced up again. It's up 1.87% right now, but you still have the 10 under the 20, price under the 50. Could this be a trend change? It totally could. But as of right now, still a bearish trend. Let's go to market breadth. And this is what's kept me out of the market for a minute, because I was calling it right before the peak happened. I got out on January 27th. January 27th was this candle. This candle right here. So I said, watch for a pullback. And that's exactly what we got. And that pullback started February 3rd. We had a bearish crossback. And February 3rd was right here. And then, of course, it took a few days, but then that materialized right here. Now, once it reached this bottom down here, I said, look, we're about to have a bullish crossover event on the breadth right here. And I said, this could be short covering. That was back, it was before spring break. So let's say the 13th, 14th, which is right here. This candle, this specific candle, green on green doesn't look great. Let's try that with a different color. This specific candle, I said there could be a short covering rally, and then there you go. It's almost like I know what I'm talking about, but that would be counter trend trading for me to put that on. And here's the deal. When the market is weak and the breadth is weak, you would look for bearish trades. When the market is weak and the breadth is strong, you could look for anything, but that confluence of factors makes it really hard. The reason I say that is because every stock out there, 40% of the move of the stock is due to the market. If the market is moving down, it's going to be pulling down your stock. If your sector is moving down, it's going to be pulling down your stock. And if your stock is performing well, that's only 30% of the stock's move is due to the stock itself. And it could go so much higher if you aligned everything together. And so for me, when I look at this, I see the market breadth getting bullish like this screenshot here. So we still have a sell signal in the SPY. We still have a bearish trend, but now we have bullish market breadth. So for me, the master keys locked me out. And this is where I say I have no FOMO. I have a plan. I'm following my plan. You have a plan. You need to follow your plan. And then you have no FOMO. And that is something we are just so y'all know, every week I'm trying to introduce something new. Like we've introduced only price pays. We've introduced monkey hammers. We've introduced red light, green light. We've introduced the outlier trend template. Now we're introducing NOMO FOMO, right? This is strategic. Chris has got some ideas in mind. I'm trying to teach y'all stuff where it's easy, breaking down complicated concepts into easy to understand jargon. That's what I'm trying to do, which is why I say I want every one of these live streams to be better than most people's paid courses. So for me, I'm all locked up, but that's okay. You don't have to be. You can look at some stocks. So tell me what you're trading in the chat. That's what I want to see. Now I saw some buzz about AMD. So let's go look at AMD. Let's go first to look at it in Outlier. Let's go over here to Outlier and let's look at AMD. So what I want you to do is type in the name of your stock and long, or looking for it to go up, of course. And then the name of your stock and short if you're looking for it to go down. Now, AMD has this buy signal back in January 8th. And I've mentioned several times, right? If you see a buy signal within a downtrend, that's not necessarily a buy to go long. That's more of a buy to cover your shorts because that short signal was right there. So it does have a buy signal. We'll leave it at that. We can see that the fear and greed peaked at around 23 on the fear and is now moving up. It's currently at 29. The tech sector even is getting less fearful, a little bit more greedy. So that's what you want to see if you want to go long AMD. And we do have that crossover today of all days, right? The 10s over the 20, prices over the 50, a huge move up. But it is making out with this I like to say kissing order blocks. Today it's making out with this order block right here that was created on February 18th. And we'll have to see if this order block does provide rejection to it. But listen, the market is not bullish yet. The market is not bullish yet. And I want to keep a couple things in mind, just to share a little personal anecdotes here, right? When you see big moves like this, it is exciting. A lot of people get really excited and they throw risk management right out the window. They see a green candle after a long span of a stock moving down or a long bearish trend, and they're like, "We're back, baby." You know what? All of those losses, they don't matter because I'm going to get it right back. Okay. Number one, follow your plan. A, make a plan. B, follow your plan. So, will AMD go up? I don't know. I don't make predictions, but this currently, as of right now, actually is a bullish trend with the overhead order block. So that's my opinion on it. SCHD from the guy. SCHD. I know a lot of people like SCHD. I think that's one Professor G over on YouTube likes to talk about. So it's currently sitting in a sell signal. And you can see here the greed has evaporated and it's getting into the fearful category. It doesn't really look like it's stopped getting more fearful, by the way, to me. It's super sideways since that point here. If we look at SCHD, what's the trend line saying? I mean, this is one of those times where when it's between order blocks, you could see a lot of back and forth movement, which is what you're seeing right here. Boom up, and then another boom back up. So this SCHD looks like it might trade sideways for a hot minute. So for me, that would be an opportunity I don't want to take. And the reason that I don't want to take it is I don't want to be sitting on dead money, right? I want to find it when it's doing something like this, where it's in a beautiful, strong upward trend, not in a trend where the moving averages still really haven't figured out which way they're going. But thank you so much for that. Mario wants to look at IonQ long. IonQ. Okay. So looking at IonQ, got the sell signal, came just a couple days ago. The market is getting, well, IonQ itself was getting less fearful, didn't quite get greedy, and is now getting more fearful again. The tech sector, however, is getting a little bit less fearful. But IonQ, if we look at it here, yeah, it's definitely in a bearish trend. Let's go over here real quick. See if there's any order blocks. As of today, it's got a bounce back up on top of these order blocks right here. And then it might close right over this one. So trend might be changing. Not really sure. But to me, IonQ's got a lot of more bearish sentiment, even though it's up 18% today. IonQ's got a lot more bearish sentiment than it does bullish sentiment to me. SCHD is a easy long-term dividend ETF. Makes sense. Hopecast says, I feel like I'm missing out. Nah, you're not missing out. You're in the right place. Let's see. OKTA. Not a lot of people ask about OKTA. OKTA. Why do y'all like OKTA so much? All right. Got a sell signal here. Got ultra greedy. Like this is up to 95 on the greed factors. So here's the deal. When it gets super greedy, watch for snapbacks. When it gets super fearful, watch for snapbacks. And we do have this sell signal right here. So watch for a snapback. Tech sector is getting a little bit less fearful, but this one got ultra greedy, so it might just snap back. Let's look at OKTA. And it's within this order block right here. But to point something out here, right? This is what your trends you want to see. These are the type of moves you want to see. Right? These are when the moving averages start splitting apart because it's a really strong trend. Whereas if we go back to SCHD, so mind these trend lines right here, and then look at this one. You see the difference here? You see the difference how they're all crossed together, all smushed together? Whereas this one here is they're all spread apart and very wide. That tells you that this stock is in a much more bullish trend. So good one there. Dormith wants to go the long hood. He wants to go the hood long. Either way, let's look at Robinhood. Robinhood just got a buy signal. Look at how deep in the fear it got. Down to 10. I think that might be the lowest one I've seen yet. Got a fear value of 10.5. Buy signal came through, and it's been getting a lot less fearful very quickly. Financial sector also getting less fearful. Let's look at the hood. Yeah, there you go. Not quite a bullish trend yet, but it's heading that direction. 10's not over the 20. Price is over the 50 right now. Remove this annotation here. So there we go. Let's look at the next one. Slug Deezy wants to look at ARQT. All right, buy signal just came through. We're getting more and more greedy up here. So here's the thing. When it gets more greedy like this, so the buy signal came through on March 20th. It was at a greed value of 72. Now, I will be honest, I haven't updated my slides yet, but if we were to do this together, I would say giving it from, I really need to do the math on this. G0 to G25 would be, that'd be 0 to 75. In fact, let's do this together. 0 to 75. So G of 50 to 75. Give it a 10-point spread. If it's over 75, I would give it 5-point spread. So not much room because we talked about that snapback here. So starting out at 72, and let's zoom in even a little bit. Let's get a little bit more pedantic about it. Starting at 72, the following day it's at 73. Today it's at 74. So it's got a little bit more room to run as far as the way that I would trade out of it. But of course, like I say, when it gets really elevated, that's when I start to get more defensive. McD. Sell signal on McD. And not very fearful or greedy, just kind of right in the middle there. Not a whole lot going on. Whereas the discretionary sector is getting, the fear got really high. I don't know how the fear level just on that right now. I know that that's an enhancement coming soon, but the sector itself is getting a bit less fearful. Let's look over here real quick. McD, come on. Yeah. So McD looks like it's also in one of those sideways trends right there, right? When those moving averages are really tight together versus when they're really spread apart. So McD, to me, I mean, technically, you've got a sell signal. You've got not really a lot on the fear and greed. And then the sector itself is getting more fearful. And then the stock itself is not really performing. I mean, this one looks like it could be one of those dead money stocks for a minute. I could be wrong. And that's the thing in trading is that you have to be okay with being wrong. When you're okay with being wrong and you know what you're going to do, there's no more FOMO. Never is there FOMO. Never, ever, ever. But real quick, if you are an influencer of any size in any niche, we want to work with you. I am actively putting together our influencer plan, and I've emailed several of you already, and I want to add so many more to our Rolodex over here. We want to work with you, and we want to pay you directly. So of course, be sure to tell me in the chat what you're trading, and come back tomorrow. But it ain't gonna be tomorrow. It's gonna be Wednesday, where outliers like us will help you save time, make money, and start winning with less risk together as a team. Have a fantastic day, and be sure you click on one of these recommended videos that YouTube is popping up. I recommend you should click one of those, and have a fantastic day. We'll talk soon.
10 over 20 over 50.